Welcome back, everyone. Next, we have VOX Royalty Corp. It trades on the NASDAQ under the symbol VOXR and on the TSXV under the symbol VOX, and is a returns-focused mining royalty company with a portfolio of over 60 royalties and streams spanning 8 jurisdictions. Let's take a moment to watch this video.
Terrific. Well, thanks everyone again for joining us. It's a pleasure to be back at the conference. We've had a tremendously productive last few months since we've been on. Excited to tell everyone what's new with VOX Royalty Corp, especially as we start this year. Everyone understands that this market climate is it's challenging and it's difficult to find interesting investment opportunities. And I think VOX really stands out as a unique opportunity. I will point everyone to the forward-looking disclaimers. I will be making forward-looking statements. But in this macro environment, what stands out about VOX Royalty Corp and why do we think we're such an interesting story? To hopefully what we expect is realize appreciation for our investors in the stock and in our underlying valuation. Number one is commodities are off to just a fantastic start this year, one of the best starts to a year that I can remember in my career. And so that provides us a tremendous amount of buoyancy to the overall sector, and specifically to a company like VOX that has so much exposure and so much leverage to commodity prices. The majority of generalist investors remain significantly underweight to commodity exposure. And in these types of climates, commodities have been one of the shining stars, both in inflationary times and in recessionary times. So we believe VOX as really a unique opportunity within that sector of commodities stands out. Royalty companies specifically have done probably better than almost any commodity-based benchmark over the last 20 years within the subsector of commodities. And so really just the amount of tailwinds that we have behind us operating in the commodity sector, the exposure that we bring, the macro tailwinds that are really kicking into our business. And we're starting to see a lot more interest, especially in royalty companies, because we're not affected by the inflationary pressures when you have the type of royalty portfolio that VOX has. So this macro environment, very difficult to invest in, but I would tell you VOX is really uniquely positioned in this environment to what I expect to achieve is additional value and hopefully price appreciation in our stock as well. One of the reasons why royalties and royalty companies outperform general commodity investments, mining investments, the ETFs, the physicals, is that it's really asymmetric upside versus risk. VOX generates exposure to the revenue that mining companies generate without having to contribute any of the capital. So we buy third-party royalties, meaning we go look for someone that used to own this land or used to have the mining rights that vended that out or sold that on, and they kept back usually a 1% to 2% net smelter returns royalty, which means generally 1% of revenue. So we collect these revenue interests all over the world on very interesting mining projects where a team of mining engineers and geologists are cherry picking the best assets with the most value that we hope can deliver returns like you're seeing on the screen. The right kind of royalties over the right kind of assets really outperform it and create profound leverage to the upside opportunities in these mining operations. And it's really unique within a royalty company like VOX that we have over 60 royalties and projects that we hope will look a lot like these case studies on the screen, which is generating 10x, 20x, 100x returns with these interests. And so VOX is really excited about our portfolio of royalties. This is what we modeled our business after, is targeting these types of assets and these type of opportunities. I will say these are case studies, but we have assets in the portfolio that we think are developing along similar lines. And you're seeing that happen fundamentally within our business. The results that we're generating are very, very positive, very significant, and compounding. And it's because we picked the right type of asset class with the right type of team, with the underpinnings of a competitive advantage that no one else has in the industry. And it's allowing us to generate excess returns in an industry that for most other players is highly competitive. So what makes VOX what we believe is a smarter commodities play? We have accelerating growth. We're a capital light business model, and we're trading at less than intrinsic value. We're paying a dividend, yet we're growing faster than anybody else in the industry on a per share basis at accretive levels. And we're really trading at what we believe is a very significant discount to the real value of our portfolio, where most of the comps in the industry are trading at premiums to the value of their portfolio. So we naturally think we're positioned for excess returns from a market perspective as the market really wakes up to what VOX is doing. One of the reasons I think this disconnect exists is the last 15 months for VOX have been really productive. You can see on the screen the revenue growth from 2020, 2021 to 2022. That's based on expected numbers. We should be coming out soon with actual revenue numbers, but that's what analysts expected, and that was guidance. That growth is very significant, and it's really been realized over this last 15 months. The market, I think because of there's been a discontinuity that's developed with some of the challenges that have persisted at a macro level with stocks. And so I believe what we've delivered over this recent time period has largely been missed by investors. I think investors are just starting to wake up to the profound capability of good royalty companies. And then I think investors should be paying attention to where we're trading relative to our peers and relative to our intrinsic value, yet delivering very significant revenue growth and paying a dividend. We're a very unique story in the commodity sector, and where the macro headwinds portend very, very well for our business. Very quick overview on our capital structure for investors that aren't familiar with VOX. We went public in May of 2020. We are trading actually at the same level despite the accretive growth that we've delivered since 2020. So it's really an opportunity for new investors to get in essentially a ground floor level despite the significant value that we've created for our investors over the last 2.5 years of being a publicly traded business. Our market cap is around 134 million, very strong balance sheet with cash on hand, no debt. And something I would point out is management owns approximately 15% of the business. We look at this business every single day as shareholders first and foremost, and how do we deliver both short, medium, and long-term growth with a very clear focus on long-term value for our investors. We believe we're delivering the best value day in, day out in this industry, and I think our results speak to that. You'll note that the majority of our portfolio from a net asset value perspective is weighted to precious metals. That being said, we have a lot of significant exposure to battery metals and industrial metals. And so we will continue. I think you'll see us find interesting opportunities in battery metals and some of the industrial metals, but we always will have that significant base of precious metals as well. Very low geopolitical risk. For investors new to the VOX story, approximately 80% of our assets are in the lowest risk jurisdictions that we believe provide the best opportunity for value creation within the royalty sector, that being Western Australia, Canada, and the US. And we're in the best jurisdictions in those tier 1 jurisdictions, being Western Australia, Ontario, Quebec, and Nevada. So we're very excited about the stability and really the jurisdictions that we have royalties over. We don't think a royalty company could really offer much better from that perspective. And then very significant rapid organic growth. One of the things to realize about a royalty company is that we can realize growth without investing one further dollar. So you see we have 7 producing assets now. That's projected to be around 17 over the next few years. And it's operators spending hundreds of millions, and in some cases billions of dollars to bring those assets online. We get the benefit of that without being diluted. And then we're not the operator, so there's no further capital that goes in. So again, capital light business, asymmetric return and risk that works in our favor as the royalty company, and hence why royalty companies have outperformed the commodity sector over the last 20 years. Industry consolidation, if you're looking for further tailwinds beyond just a very buoyant commodity market, investors looking to increase their exposure to the space, and royalty companies being one of the stars within that sector, industry consolidation is happening in our little niche. And we've seen 5 companies acquired in 2022. I would expect that to continue. VOX is, I think, an interesting company for many businesses, given the strong cash flow growth profile, the strength of our assets, and the competitive advantages that we have within the company. So we'll continue to update our investors and the market on what we see is happening in the sector. But it was a very active year in 2022 for acquisitions in the space, and we expect that to continue. So why VOX? Why now? Really, it boils down to what I think is we have better return risk profiles than almost any other royalty company right now, and certainly more than the mining industry as an aggregate. We have significant growth that we've been delivering year over year over year. You see those results delivering in terms of a dividend that's now being paid, one that we expect to grow certainly over the medium and long term. You have an aligned management team that continues to build the value day in and day out to this business. And last year was very, very catalyst rich, and it was not reflected in our share price. So the fundamentals are there, the balance sheet is there, the business is growing at a pace that's exceeded our expectations, and I think exceeded a lot of the expectations of our existing investors. And so we believe we're just very uniquely positioned to create value for investors in the market. Industry consolidation is happening. That's generally a very good thing within our space, and I think that's going to encourage further investment by investors. And we continue to have one of the strongest royalty portfolios in the sub $500 million royalty class of companies. There are not many businesses that have this type of portfolio that's developing, that continues to develop, with over 200,000 ounces being drilled, 200,000 meters being drilled in our portfolio last year at no cost to us, billions of dollars being spent on our development stage assets, and new assets coming into production. We are, as a management team, thrilled with the fundamental success of the business, the outlook of the business, and we believe this is the year that starts to get reflected in terms of the market valuation of the business, and that disconnect versus our intrinsic value and market value gets adjusted. You can obviously see on the slide here, brokers have much higher price targets than where we're trading now. In a lot of ways, I think those are somewhat conservative, but we continue to build value in this business every day. The tailwinds are significant. The fundamentals are going in the right direction. And we just believe that upswelling of momentum in our business is going to get reflected this year. So, Anna, with that, I know a lot of the audience is somewhat familiar with our story now, so I will turn it back to you and open up for Q&A.
Okay, great. Thank you so much, Kyle. Great presentation. And current investment climate and expectations around a recession have investors looking for contrarian or uncorrelated companies that can continue to thrive in these very turbulent times. So talk a little bit about how VOX is positioned from a macroeconomic perspective.
Yeah, and I love the way our business is positioned. When I founded the company almost 10 years ago, it was really forward-looking in that I believe that there would be an inflationary environment. I believe that there would be an environment where investors were looking for commodity exposure, and for investors that aren't necessarily sector specific to resources, commodities, and mining companies, we want to develop a company that harvested value over the right kind of assets in the right kind of way and delivered really, truly great fundamental results for shareholders. And so we find ourselves in that market now that we've been building towards for the better part of a decade. So I'm pleased to say that really this market is tailwinds to our business versus most industries are seeing margin compression. We're seeing margin expansion. Most industries are seeing price pressure at this stage when you factor in inflation. We're actually seeing appreciation in underlying commodities that we have exposure to. And then we've had just a tremendous amount of growth within our assets. We've gone from 1 producing asset in 2020 to 7 producing assets now, and that growth expected to continue over the next few years. So this market, despite the challenges it's presenting to investors, the investors looking for uncorrelated or I would call it contrarian type of opportunities, I think VOX really fits that mold.
And so what separates VOX from other commodity investment opportunities?
Well, we touched on it a little bit in the presentation, and that is asymmetric return versus the risk. We have 7 producing assets. To put that in context, to get 7 producing asset counts that you're deriving revenue from, you'd have to, if you're going to a mining company, you'd have to buy a multi-billion-dollar mining company. So we have what I would say the exposure and the torque of a small cap company with the diversification of 7 producing asset counts, and that asset count that's producing is expected to grow significantly. And then say if you're buying the physical, you're buying an indice, you don't have the significant leverage that we have. There were 200,000 meters being drilled, which is millions of dollars of both expansion of our resource and de-risking of our resources that we have royalty coverage on. And we're getting all the benefit of that without having to put any capital in. So lower risk, higher upside. We think that's a great formula for winning for our investors.
Absolutely. And talk about other royalty companies out there. What separates them from you?
Well, we're trading at less than our intrinsic value. The industry averages over time. If you look at forward-looking cash flow multiples, we're at the very low end of those businesses and our comps. And I'll pull up a comp slide briefly for everybody that's watching. So we're trading at the very low end of relative multiples in our industry and fundamentally less than our intrinsic value. So for everybody looking at royalty companies, well, I would start with the best value in the sector, and I believe that's VOX. So that's how I think we're one of the reasons why we're differentiated. And then something we've touched on in previous presentations is we have a tremendous competitive advantage in the form of our royalty database and our highly technical team. That's one of I think the best in the industry. We're able to find value that other comps and other competitors can't find. And you're seeing that in terms of the value that we're delivering on a daily basis to our shareholders.
Perfect. So talk a little bit about the key potential catalysts for VOX in 2023.
Well, 2023, I think, is going to be a really exciting year for us. We've initiated a dividend in 2022. With the results that we're seeing, I'm hopeful that dividend can be increased. It's something that we're discussing at the board level now. So I'm hoping that that's one of the catalysts we're able to deliver here in this new year. We continue to see fundamental growth within the portfolio. So we expect another few assets to come online and be producing assets for us, generating revenue. So further diversifying what's presently 7 producing assets to something approaching very close to double digits. And then you're going to continue to see us execute on bringing in highly accretive transactions, new royalties, and really also expanding our investor audience. VOX has been a little bit quiet in terms of being out in front of new investors. We're excited to be with you, Anna, and the conference team here. So you'll continue to see us pick up the pace in terms of really exposing investors to the opportunity that VOX is.
Wonderful. Debbie has a question. Is there any future vertical for investing in the right pre-production project? And have you ever looked at a situation like that?
Well, great question. VOX invests or buys royalties across the spectrum. So from exploration stage all the way to in-production royalties. So a lot of the best value that we found is on assets that are not yet in production, where our team of mining engineers and geologists are really able to price in both the risk and the upside of these assets, and then be able to take some risk off the table for the royalty sellers or diversify their net worth and their own personal portfolio. So we look at opportunities across the spectrum, but a lot of the assets that we've acquired at really deep value have been right before production. And so you see that playing out within the portfolio, that we're generating great value on pre-production assets consistently.
And Chris Brady wants you to explain if you are strictly transactional based. That's what he's trying to understand. And you have no other overhead other than administrative?
That's essentially correct. It's one of the best things about a royalty company is that we can scale very easily without taking on a tremendous amount of G&A. And so you're seeing our revenue grow at an outsized pace versus any G&A expenses. And that's one of the best things about this business is it's very capital light. So we have a full-time team of 6 senior executives within that. And so not much more is needed to scale. We are scouring the world for interesting assets that have interesting royalties that we can find at great value. And so that's what the team is operating and doing every single day for our investors, is bringing these assets into the portfolio. And then once they're secured, the administrative work is relatively light. And that's one of the great things about being a royalty company.
Great. So Oren B says, when you say you're trading at approximately the same value as when you went public, were you talking about company valuation or market cap? And has the share structure changed or increased? Yeah, so share prices essentially remain flat. Market cap has grown a little bit in that we did one transaction where we raised $17 million through equity with Bank of Montreal as our financing partner on that. And those funds were deployed directly into accretive royalty opportunities. And so a lot of the growth was a result of that capital raised back in March of 2021. So we have raised a little bit of money. A lot of the growth has been organic. So once we acquire assets, they grow naturally within the portfolio. We're not contributing more capital to those. But when we look at the valuation, the relative valuation,
we have, and I'll go back to that slide very quickly. When we went public, we were actually at a premium to net asset value, which was in line with most of our peers, still probably at a little bit of a discount. You see in 2021, we were basically trading at 1x intrinsic value. And now we're at less than intrinsic value by a pretty significant margin. So that's what I was touching on. I believe that we are a much stronger company, have created much more value, and the analysts agree. Yet we're trading at the same spot that we were when we went public. So one of the reasons why I think we're an exceptional opportunity at present time for investors.
And Tony Clark wants to know, are you limited as to which commodity you invest in?
So VOX focuses on hard rock mining commodities that we don't believe are going to be ESG crosshairs over the medium and long term. So and within that, we look at the commodities that we understand. So that's your general basket of precious metals: gold, silver, platinum, palladium, base metals, copper, lead, zinc, industrial metals like iron ore. That's where we really have a strong focus. Lithium in some cases as well. So that's our focus, but we really hunt for value. We hunt for quality assets that we can buy at really good value, and then we're able to deliver that excess value to our shareholders. So we are weighted more towards precious metals, but we're certainly a value-focused company when it comes to finding the right assets.
Perfect. Cedric W. wants to know if you give guidance, and what are we looking at as far as growth in 2023?
Appreciate the question. We're not coming out yet on formal 2023 guidance. That'll probably be delivered when we announce our Q4, and then we will go from there. But the fundamentals of the business are very strong. One thing I would point to is what we touched on at the start of the segment is we're seeing a very, very good start to the year for commodity prices, and that provides just a very significant momentum and wind at our back in terms of what we're expecting to generate for 2023.
Darrell Garza asks, what do you typically invest up front in the purchase of royalties? Talk about your losses. What's the risk that you make an investment in the asset if the asset goes under?
Yeah, so in a lot of cases, royalties run with the land. And so if the operator has challenges, goes into the form of administration or bankruptcy, in a lot of cases, that royalty stays with the land, and so leaves us in a very strong position. We are really pricing assets very well. It's one of the reasons why we built this company around a very strong technical team, is we're finding royalties at great value over great assets that are typically one of the flagship, if not the flagship projects for the operator. And so we've seen very few of our assets have material challenges that have diminished what we think the value is in the royalty after we bought it. We target royalties that have a lot of activity on them. So drilling, development, construction, these companies are spending tens, hundreds, and sometimes billions of dollars on these projects at no cost to VOX, and inherently increasing the value and de-risking the project at the same time. And so most of our royalties follow that path. In very, very few instances have we had royalties that, in some way, shape, or form found themselves in harm's way. It does happen, but it's been on a very isolated basis on royalties that we acquired for negligible value.
And Alex Buchanan wants to know, what percentage of revenue do you invest in new projects?
Great question. It really depends on what we have in front of us for transactional flow. So, if you look at our history, we've deployed about $50 million into royalty purchases. A lot of that back weighted to the last 3-4 years. So call that on average about anywhere from $12 to $15 million into royalty purchases per year. Based on guidance for this year, this is Canadian dollar terms. We'll do $10 to $12 million of revs based on that guidance. We're generating a meaningful amount of cash. A lot of that is getting deployed into new deals at this stage, or new royalty acquisitions that are highly accretive. So it depends. We can obviously scale up as needed. We have different avenues to do that. But yeah, a lot of reinvestment in our business alongside paying a dividend.
Jim Delgado wants to know, with that dividend, is it cash or stock? Is it quarterly? If you can explain.
So it is cash and it's quarterly.
Greg Gordon wants to know, how does commodity prices affect your royalties, if they do at all? And how is your payment calculated?
So I'm going to work backwards on that question. The payment is calculated. You take the amount of production. So let's call it 1 ounce of gold. trading it, call it roughly for round numbers, $2,000 an ounce. If we have a 1% NSR, we're taking 1% of that $2,000. That's what we're getting. So multiply that times thousands of ounces, and that's how you get to the revenue, or in some case, tons of iron ore or ounces of silver. That's how we generate our revenue, and it's based on the top line. So we're not exposed to all the cost pressures and the inflation around that mining companies are exposed to. It's a pure top line interest. And so an upswelling in commodity prices provides a lot of leverage to our business, because it's not just pricing in our current production at higher prices. It's actually increasing and allowing mining companies to go bring additional ounces or additional tons into the mine plan. So it's a real compounding factor that works in our favor. And the difference in the reason why it's better for a royalty company than even it is for a mining company, that being rising commodity prices, is we're not paying for any of that work that needs to go in to bring more ounces or more tons into the mine plan. If it requires more people or more infrastructure or more drilling, we don't have to pay anything for that. And we're not diluted by not contributing any of that capital. So we have this undiluted upside interest without paying a dollar for it. That's why royalty companies and good royalties outperform every other sector, every other component of the commodity sector, is because of that profound leverage that royalties provide.
You mentioned this before, but Philip Moss wants to know, what is management's ownership of VOX?
Yeah, so management owns 15%, and management's been buying in the open market recently. We've contributed our hard-earned dollars to this company. I founded it almost 10 years ago as really a platform for shareholders. And so, it's something that we're always excited to talk about, is the interest that management owns in this company and the alignment that we have with our shareholders. I think is very important for companies to have that alignment. And you certainly see that in the results that we're generating. They're aligned in creating long-term value for our shareholders.
Ed Chapman wants to know, is M&A big in the royalty space?
It is. It is very significant right now. And we had a slide that touched on this. It's been one of the most probably acquisitional heavy industries over the last 12 months, certainly. And I do think that continues. There's a lot of companies out there struggling for growth. VOX is not one of those companies. We continue to deliver outsized growth on a very accretive basis for our shareholders. So yes, it's been a very acquisitive industry, and I would expect that to continue.
Last question for you. Frank Mullins wants to know, what's in the pipeline now? Are you simply announcing new products as you sign them?
So we're always working on accretive transactions. We are scouring the universe, hundreds of projects a year, to find the best assets that have the best royalties at the best valuation that we can bring forward for our investors. So, I think on average, the last 3 to 4 years, we've usually completed anywhere from 7 to 12 transactions per year. And on average, those transactions bring in anywhere from, call it 3 to 6 royalties. So we're very active. We continue to have what I think is the most robust pipeline in the industry. So you're always, that's something that's going on in the background and that we're excited about, but we can't talk about transactions until they're announced.
No problem. Do you have any closing remarks for us, Kyle?
Well, Anna, first of all, thanks for having us back on. It's a tremendous privilege. We're very excited about this year for our business. The tailwinds are there. We think we're an uncorrelated contrarian investment, if you will, that is delivering significant growth, paying a dividend, trading at less than intrinsic value. We just are really excited about where our business sits and the opportunity I think it presents for investors. We're very optimistic. We've been buyers of the stock, and excited for what 2023 holds for our company and for our shareholders. So thank you for the opportunity to be back on. For any investors out there looking to find more information about VOX, VOXRoyalty.com. We're, of course, on all the normal social channels as well, and IR@VOXRoyalty.com as well. If you'd like to email any specific questions in, I'm on there quite often answering questions. So appreciate your time.
Wonderful. Fantastic presentation. Thank you, Kyle. We look forward to seeing you again in the future.
Thanks, Anna.
Okay, everyone, stay with us. We'll be right back with our next presenter.